Good day everyone, Ali is here from Safi Financial Network. Today is May 23, 2022. Alright, so here is the weekly analysis, and apologies for the late update. We are in Canada, and Canada we are in a long weekend. Last 2 days I just spent with friends, hang out with a couple of relatives, friends, and we're just chilling. Right now I'm coming back for the weekly analysis for the last week, and also today was the opening for this week, so it's going to be interesting week, I think, for us, for all the market in overall. Here is the S&P 500 monthly chart, and remember we were talking about this, and last week we just nailed it down again, just poking through 3830. That is going to be my level. As I told you exactly, we're going to hit this level. And how did I come up with this level? So if you look at the monthly chart, it doesn't show anything, no moving averages there, nothing there, but here is the breakout candle after this nice bull flag consolidation. So this is a breakout candle, and this is a follow through. So follow through, I think it did its job. It just reversed back up for months and then coming back down sharply, closed below SMA 20. Right now we had another follow through. So this is a nice level for long position if you want to be aggressive. I'm not going to long for this period of time, just because we need to wait for the reversal confirmation, especially in at least one weekly candle or daily strong with volume. But here is the trend line. We were talking about this, so it just pierces it down. Usually it does when there is a massive correction like this, or there is a intense correction like this. So always it's gonna go down, pierce it through, coming back. Right now we are just a touch below this trend line. However, this breakout candle, and if you look at the Fibonacci retracement, which everyone is looking at this video, I'm sure they're familiar with this tool. This is pretty cool tool. And if we just adjust it a little bit here, so this is 38.2% Fibonacci on monthly chart from the bottom of the COVID crash and top of the market in January 2022. So 38% Fibonacci, that is going to be a good level for correction. If you see a very decent correction, that 38% to 50% is going to be your level for a good correction, if it is a correction. I'm not sure still, but I just want to give you another example. Here's the top, the market, and look at that. Here is the 38%, here is the 50%. So 50% goes down, that's the deeper correction. Here is, if you just put it there, so you see 23%, and just getting to probably a 30% or so correction from the top. So 38% is going to be good level for corrective move. And here is the COVID crash. Obviously it goes all the way down to 78%. Just imagine if you want to go all the way down to 78%, something like COVID crash from the previous bottom, which is COVID crash bottom. So 78% would be 2748, which is another 1,000, almost more than 1,000 units for S&P 500, which is massive and crazy. I'm sure that lots of people are getting smoked, and lots of investors, traders are getting out of the market if you are in long side of the market. However, I'm not sure if you're getting to that one. We are not going to talk about this right now. We are just above this 39,000 level, and 3900. I'm just expecting this one is coming down to just a little bit more to this consolidation area. I was expecting to, and then coming back up. So right now, just S&P hit, I believe, 3810. Yeah, 3810, which is a kind of satisfied downside target. I'm not bearish at this stage of the game as I was like 2 weeks ago. And if you look at my my video last week, I told you exactly we are just going to sell every single rip to the upside, but unfortunately the market didn't give us any chance to sell the rip, because when it just have 1 day bounce, it comes down with 2 days or 3 days follow through. So it doesn't give me any selling opportunity because selling pressure was pretty sharp. Here is a weekly chart, and I just want to show you. Let me just delete this Fibonacci. It's kind of like a messy on the chart. Right now, this week, we just started positive. However, future market, futures are slamming down due to Snap missing the earning, and it just bring down Amazon, Apple, Facebook, and all those big techies down there. So after market was pretty bloody for technology. I'm sure that tomorrow you will see a downside pressure as well in New York time. However, I still believe a 3710 based on weekly chart is going to be possibility, and it's going to be very, very fair amount of possibility. And obviously this is a very, very brutal, like 1, 2, 3, 4, 5, 6, 7 consecutive weeks in a row. S&P is going to testing the bearish territory. So we haven't, I'm not sure if I haven't seen this in the history of the S&P, or probably it just happened once or twice, I'm not sure. But this is very ugly action, to be honest. If you want to slice it and dice it anyway, this is very, very ugly action. It is oversold, it is due for bounce. So how far it's gonna go up? I believe 41.25 or this trend line, that's going to be your bouncing area for the target. And again, it's going to go down sharply, probably going all the way down to here. This is the first level that I'm just touching, 33.83, or let's say 3400. That is going to be the ultimate target for first ultimate target. I have two alternatives. I'm not gonna get ugly right now, but of the first and very, very important downside target would be this trend line. If you just zoom out a little bit, here's the trend line, the blue line. You see this blue line is going all the way down there, and here 3400. So 34, it's coming to this nice consolidation, October, November 2020, and I believe we can reach there in this October. Again, it's not gonna go down in a straight line, but it's fair amount of possibility to go test this level. And if it holds this area, so probably we are going to see a good bounce. I would say good bounce probably to 4,000 area, so 600 unit for S&P. That's going to be a lot rally, but after that, market needs to make a decision. If they want to just be in bear market for a long time, then that's going to be a good opportunity to just get out of the market, because market is going down to test the low, probably lower low to 2,800 area. But again, we're not talking about this for a long time. We should just see the chart, where chart is going, and we're just going weekly by weekly as you're following me in this weekly analysis. And let's go to daily chart. Daily chart is pretty interesting just because last week we had consumer staples coming with very, very negative earnings. I should say negative numbers, and S&P goes to bear market territory. So as you know, I'm not a follower of this 20% or so, because that 20% threshold doesn't tell you anything. It's just good for some people who are just following media, or very, very old school people are talking about this 20% threshold. Right now, you see on Friday, we tested 20%, more than 20%, almost 21% decline in S&P 500, but market just rebounded back with a high volume. I believe 137 million on the chart for volume for SPY, which is S&P 500. Today we had nice follow through, and this follow through just after market again doesn't have any following, just because market gap down crazy. So this gap down, to be honest, is not ugly shape. However, I think market can go higher if we close above this 20 SMA on daily chart. and also if we close above 4100. So keep look at 4100. This wide range bar is very massive decline. You see the size of the candle. What day was it? Is it like a May 18? And May 18 was 118 million on S&P 500 ETF, which is SPY, and that is a kind of like institution, again a sell-off. So these institution sell-offs are not getting backed up by the buyers, just because buyers cannot even go to half of this. Even it has followed through, going down, bouncing back up, institution again selling off. Right now we have nice tweezers here, one doji and follow through, so that is going to be a reversal, especially at the double bottom. So lots of people are telling you this is a double bottom and this is going to be something like this or something like this, and these tweezers, yes, we could see a nice bounce to the upside, and probably we are engulfing 4100 all the way back up here to 4200 or 4300. But I'm not saying this is going to be the end for the bear market, just because when we are hitting this one, there are lots of pressure, selling pressure inside these candles, especially this one, follow through with this large candle going down. So probably that's going to be end of the relief rally or bounce back to the upside, but probably it's gonna sell off. It's gonna have like a following sell-off down the road. So I think our first 2 weeks of the month of May, month of June, and we have lost a week for the month of May. This week and next week and next 2 weeks are going to be slightly positive to the upside for S&P 500. But again, that's going to be just a relief rally in my idea, and I think we are going to hedge ourselves again with some puts and probably short the market down the road when we are getting to nice levels here, because I believe S&P has more downside target to go, and it is not going to be the end for this bear market right now. Okay, so I'm going to talk about NDX, which is Nasdaq and Russell and Dow Jones, in the other videos. If you like this video, please smash the like button, and if you're not subscribed to our channel, please do subscribe. It's going to be good materials. We're talking about different stocks, different indexes weekly, and also intra-week we are coming with updates as well. Have a wonderful week. See you on the chart. Bye bye.